Hey, Ian, this is the Ian Cast back again. You were by your lonesome last week, and I'm back to join you on the Ian Cast.
Hey, yeah, how's it going?
Good. I wore my special. This is not like an official SpaceX shirt, but
Yeah,
we got to support the mission to Mars.
for
Lots of
sure.
exciting news there, but we're gonna stick this week. We'll start with all the stuff that we usually cover. We'll get to the stock market too. However, I feel like there's a lot of stuff going on in crypto that's pretty exciting. There's big price moves happening. So let's start with crypto this week.
Okay, yeah. So again, as we've been saying, there's this crazy movement in like the smaller altcoins. We're starting to see that transition to Ethereum because a lot of these smaller coins are actually like tokens that are programmed on the Ethereum network. So we're starting to see a lot of money flow into those. And some of them are up like hundreds and hundreds of percent just within the past few months, which is a really good sign because the last time that there was a crypto rally or a big rally at least, was like April, May, June of 2019. And at that time, it was really only Bitcoin and like a couple other big ones that rallied, and the small ones kind of stayed still and then made new lows after that rally was done. But now we're seeing these smaller ones, like I said, up hundreds, even thousands of percent in some cases in the past few months. So that's a very good sign because when those smaller, riskier type cryptocurrencies start to rally, that's a really, really good sign that people are willing to take risk and they're willing to, put their money into more speculative, less certain kind of crypto projects instead of just the big ones. And of course, we're seeing Bitcoin and Ethereum rally too.
Yeah, you were saying over the last couple of months. I was just thinking I have some of these coins that have doubled in the last couple of days.
Yeah.
I mean,
Yeah. It's
if
been
you look at
crazy.
the moves in Chainlink,
Yep.
Compound, Atom, Kyber Network,
Yeah.
KNC, and there's Algorand. I mean, these have been like doubling in some cases, like over a couple of days.
Right.
And it's what you've said, which is like there is a lot of money pushing in to crypto. Grayscale has been indicating that to us for over a year. Every one of their open calls for people to invest in their Bitcoin trust have been more than filled. I believe it's been over allocated.
Yeah.
And now they've opened ones up for Litecoin. They have an existing one for Ethereum Classic, one for Ethereum that all these
Yep.
DeFi coins are sit on. So it does look that there's a massive amount of money pushing just generally into the crypto space. And we've been talking in our Slack channel that we feel like, you know, one of the signals for sure seems to be fees.
Yeah. Yeah. So right now, Ethereum fees are like skyrocketing. I'm not sure exactly how much they are, but I know they're the highest they've been in a really long time. And that's because of all the activity on the Ethereum network. That's where most of these smaller cryptocurrencies really exist and are programmed. And that's where these projects happen, is on the Ethereum blockchain. So the fees to use this blockchain are now really, really high.
Yeah, and there's a self-fulfilling aspect to this, which is that the fees are in Ethereum themselves, right? So to pay the
Yeah.
fee, you have to actually either mine the Ethereum or you've got to go buy the Ethereum. So there's a ratcheting factor to crypto, which is quite interesting, and it's there. And we've talked about this, and we go back, I believe, 2 weeks. We put up an article talking about Ethereum fees rocketing up by 1,000%. And also,
Right.
we've talked through the halvening process how the halvening is also going to drive miners out of business, marginal miners, meaning people that were not making a lot of money. We're going to go out of business because the rewarded half for Bitcoin.
Yep.
And that would necessarily drive a certain scarcity. With fewer miners available to process transactions, fees would rise
Right.
and go up. And those fees also have to be paid in Bitcoin. And then, of course, the longer you have to wait, the higher you're likely to bid the fee, which drives a rising demand for Bitcoin. So you can see how this ratcheting factor on fees works for crypto pretty much across the board.
Yeah, it's pretty genius actually with that because it does drive the price higher. because there's more demand for the cryptocurrency. And yeah, as you said, there's less supply now for Bitcoin. With Ethereum, it's like I'm seeing these new projects every day up on the Ethereum network with ICOs, and it kind of reminds me of 2017. And of course, as of now, there's way more regulation, so there's not going to be as many scams. But there's just so much excitement and hype around these new tokens on the Ethereum network. It's really, really bullish overall. Definitely the most bullish I've seen since that big 2017 rally.
Well, I have to definitely differentiate a difference between 2017 and now.
Yeah,
I would say the tokens, the coins that are coming out now actually have a purpose that I can understand.
that's true.
And you can actually like layer it onto something that's actually useful, that actually is going to have significant utility as it gets adopted and rolled out over time.
Right, exactly.
Yeah. So the crypto world, as we've been talking, now is really kind of forming, at least from our perspective, into three. There's the store of value currencies, which in the way we're looking at it is Bitcoin, Bitcoin Cash, Litecoin. There's probably some others. Those are, I believe, the three big ones, right?
Yeah, yeah, for sure.
And then there's the platform currencies, which is you can layer on additional projects, additional tokens, additional coins, currencies, which is Ethereum, which is the big one, which even for being as big as it is only got a $48 billion market cap
Yeah,
computed in the standard way. I know people argue about that market cap, or how many coins are actually out there because there are burns that happen and things like that. But
hmm,
if the prices for Ethereum keep rocketing up, you know what's going to happen.
yeah. There's going to be even more demand because people like to buy in at higher prices, and once people have already made money, they're more likely to buy even more because they're seeing that it's a good investment.
And then there's also going to be a point at which some number of people are going to be like, well, I'm going to look at alternatives.
Yeah,
And then the next alternative is XRP,
right.
which is there. And then that forms like, part of that other stack. So where it's Ethereum, XRP, Lumens, I believe, is the next one that's in there. I I'm trying to think if there's another one in between.
What for like just the biggest market
Just
cap?
like something that's like a blockchain, that represents a platform that people can put projects on top of.
There's like Tezos and Cardano or another couple.
Right. I suppose Tron and others. And
Yeah,
then there's the world, we started out with DeFi coins, which is just exploding out, where people are talking about sort of custom building coins for specific purposes.
yep,
That I believe there's a really good reason for these coins to be exploding in value, because for now, in theory, the worlds that they would address, which are in banking, in finance, trade finance, insurance, aspects of smart contracts, these are very, very large sort of opportunity sets.
oh yeah. I mean, some of the biggest in the world. The global banking industry is trillions of dollars. So like nobody is really using these crypto projects on a big scale yet. So the room for disruption here is still like 99.99%. So yeah, like huge upside, and they're starting to price in like the very, very beginning of that now, which is also very bullish.
Right. And let's just, come back to some of the things we've said about Bitcoin, which is that many people are skeptical in, what's our
Yeah,
price target for Bitcoin for 20,
50,000.
50,000. So it's like, so I've had people like, Paul, I'm beginning to warm up to Bitcoin, but 50,000 seems crazy. However, if you just think about it, Ian, just back in March, Bitcoin crashed to 3,800. And it's
Yeah,
already at like nearly at 12,000. It hit
right.
12,000. It keeps, there's clearly a seller at 12,000 that's willing to draw it back down. So that's a 4x move already, a 3x move already.
Yeah. Yeah. I mean, if you look at the 2017 rally, if you took the same percentage gain from August through December and put it on this year, I think Bitcoin would be like 70 something thousand by the end of the year. So it's happened before in the same exact time. So, if it's happened before, it can definitely happen again.
Right, and you saw that story. I mentioned to you about Kathy Wood, actually from ARK Invest, who does amazing work. I highly recommend her. She put out a story talking about how MicroStrategy, which is a publicly traded company, is now buying Bitcoin as a store of value, as
Right.
instead of cash. Yeah.
Yeah, yeah, which is huge because it's the first time we've seen like a big company buy Bitcoin and like actually have it as like a holding in their company. And they're not even a crypto company. They're just doing it to have something, an alternative to cash on their balance sheet, which, you know, is an unprecedented thing, at least that I've seen.
Yes, I mean, obviously the miners, and you've got a number of those in the $10 million portfolio service. They obviously hold Bitcoin
Right.
after they mine it, and it is held as an asset on the balance sheet. However, for a regular company to begin to buy Bitcoin is definitely precedent setting. And it now shows you one additional source of demand, Ian, for Bitcoin.
Yeah. Yeah, which is huge because, you know, companies like to stash, you know, a bunch of cash on their balance sheet because it makes them look, you know, more investable. They have this cash reserve and whatever. So it's, you know, it's a really smart move by them. It's a really groundbreaking move for crypto because yeah, if they're doing it, you know, they're I think almost $2 billion company. So if a company of that size is doing it, you can bet that other ones are going to follow.
It's also for some companies that can manage it, an answer to if interest rates go negative in the United States, you would be willing to put your money into Bitcoin or potentially even Bitcoin Cash. All the store of value cryptos
Right.
will start to get a serious bid from more forward looking companies, individuals, family offices that say, well, rather than leave my money in the bank and get negative 2% or negative
Yeah.
3%, I'm going to take my chances on crypto.
Yeah, absolutely. That's going to be a huge factor of demand if and when that does happen. But yeah, so obviously institutional buying is way up, which is going to be a big, big driver of the coming rally. And now, yeah, corporate demand, which, you know, nobody really expected at this point, but it's a great sign for sure.
Yeah, and we have some participation in crypto in my flagship service, which is Profits Unlimited, which, as you know, Ian, our team is trying to push. We have this new funny ad out. Normally, our ads are these very long promotional ads. They run 20, 35 minutes on very specific ideas. We have one on America 2.0. So if you want, please check out our ad, this funny ad. It's about 3 minutes long, about really the difference between what Ian and I work on and what we do, what our team does at Bold Profits, versus the regular financial industry. And
Right.
so we'll put up a link for where you can watch this ad, and then check out Profits Unlimited, where we do have through trackers of Grayscale participation in crypto to the extent that we feel is right for the kind of audience that Profits Unlimited really draws, which is a general audience of sort of regular investors, rather than people that are really, really, really focused on crypto. And I know Ian and I, we're totally into crypto and have been
Yeah.
for a while. We spend a great deal of time talking about it. That's our enthusiasm. Nonetheless, check out the ad. It's funny. It's kind of cool. And we're trying to get the ad to have, I don't know what the number is. I think 3 million views by the end of this week. So check that out as well. All right, Ian. So we've done crypto, so much interesting stuff out there. The price action, definitely positive. Let's talk about Tesla, because, you know, there's a lot of questions about Tesla in my Twitter feed coming
Right.
through. They split the stock. And many people want to know, you know, well, what does it really mean?
Yeah, so and it's coming off the heels of the Apple stock split, which makes me think that stock splits are going to be like the new thing for a little bit. But yeah, so a stock split basically doesn't change the value of the company; it only changes the value of the shares. So if you have one share of Tesla and it's $1,500, and they split it 5 to 1, then you've got 5 shares after that that are worth $300 each. But what it does do, of course, is it makes the stock cheaper, so, you know, more people can buy in, and, you know, it's more attractive at a lower price just psychologically. So it really can raise demand for the stock price. And that's been a trend, you know, that's gone on forever really with stock splits.
Yeah, that's right. It also makes it, I mean, there's a lot of people that bought into Tesla quite early, and it makes it a little bit easier to sell as well.
Yeah, it does. Yeah, that's
Because
correct.
now you no longer have to sell something $1,800 worth of it. You can sell $300 or $400 worth of it now. And my guess is that it makes the stock a little bit more liquid, even though in Robinhood and any number of other apps there is fractional trading. However,
Yep.
it does create a liquidity on the institutional side in the sense that fractional trading does have to be aggregated, so that because they are ultimately each company's shares are ultimately designated in shares, so they do have to combine it together, and so it will make some of the trading in Tesla probably a little bit smooth. And then we were
Yep.
also kidding around that it probably will also make people, all the haters, it makes it easier to short as well.
Yeah, yeah, for sure. So, I mean, that's just more fuel for the fire for Tesla to make another big rally. So, yeah, the more shorts, the better.
Right, and on a company basis, I've been seeing a lot of developments on the solar and battery side of just really in general across the industry. Once again, Tesla has led by sort of pursuing a direction that was seen as sort of alternative, not that important. This is
Yeah,
but now, I mean, the like I recommend this acronym STIX, and one of the ETFs in STIX, it's five ETFs, is TAN, the Invesco Solar ETF, which has been rocketing up.
yeah.
And now people are really starting to price in the end of carbon fuel, in terms of they're starting to see where, like, okay, it may be 25 years out, but the markets will move well ahead of that to price that in.
Yeah, and there's all these, private companies that make electric vehicles or some variant of that, whether it be fully electric, hybrid, or even just solar as a business. They're starting to come public. So this is definitely a booming market right now because you can tell that there's demand for solar companies in the stock market, solar alternative energy in general. And Tesla is one of the biggest alternative energy companies in the world, if not the biggest at this point. They've got some of the biggest energy storage installments in the world. Of course, their electric vehicle business is the biggest in the world, and now they're going to start doing the solar roofs, which they expect by the end of the year to have 1,000 installed per week, which is like a lot. That's really big for their business too, and that's going to be millions of dollars, like a month by the end of this year in revenue. So that's only going to get bigger from here. So they're hitting at three really, really big components of alternative energy.
Yeah, I mean, and many people forget, they look at Tesla as a car maker, and we have always said that Tesla is really a mix of a new industry, really, which is really not cars, because then there's also the robo taxi element of autopilot, which is
Right.
1 to 3 years out. You'll start to see that business roll out. So it's a mobility logistics business. Then the battery represents some, variation of all these gas stations, a refinery, and then there's the solar business, which is, like a utility business. So they're going to take
Yeah.
market capitalization from all of it. They've already essentially started to suck dry the car market capitalizations of the world.
Yeah, yeah, I know. It's ridiculous how much they've been able to accomplish the past couple of years. And now they're starting to build that big gigafactory in Texas where they're going to make the Cybertruck. And I think the Semi is going to be made there too, which are going to be two big revenue boosters in the next couple of years.
Well, people's objection to Tesla always has been, Ian, when we put it into our portfolios, our model portfolios, Paul, they make, pick a number, 0.1% of the cars in the world.
Yeah,
And one thing that I feel like most people that our regular investors all focus far too much on the existing quarter, and then they look backwards, whereas no one that is really making an investment in Tesla, and that was true when it was far lower, and it is true now, is looking at today. Everyone is looking minimum 3 to 5 years out. And
right.
people who have that view and have a lot of conviction behind that view, those are the ones that made money in Amazon. Those are the ones that made money on Google. They're also the ones that made money on Netflix, where there was a incredible transformation that was unfolding and is continuing to unfold. And Netflix is a great example. And, I mean, I read an article, I believe this also was a note from Kathy, talking about linear TV, which had sort of the advertising had been sort of flattening out, largely driven by live sports. That's what kept it
Yeah.
alive.
Right.
Now has seen a collapse during the pandemic, and it's with sports coming back, the people have moved on, and it seems like while there'll be some recovery, it looks like linear TV essentially is going the way of retail.
Yeah, it does. Yeah, I mean, I have YouTube TV, which I like, but I just use it to save shows on there and then watch them later. Of course, there's Netflix, but yeah, with sports, you're right. That is what was keeping people watching, and now you've got sports streaming. You've got Sling, DraftKings, these other companies that are working on doing that. There's really no point in having the old school linear TV anymore.
Right. I mean, the reason for bringing it up is that markets saw that 3, 4 years earlier, when all the objections that you were hearing about Tesla were also applied to Netflix. They don't own their content. They only have XYZ% of the market. However, the market
Right.
moving forward could see that the end of linear TV was coming because cord cutting was accelerating, and various different developments were showing you that the world of content was going online, and it is gone to now the market capitalization of all those content companies is in Netflix. It's in maybe TikTok, I suppose, YouTube. I'm trying to think where
Yeah.
else.
Well, there's Twitch, which Amazon owns, which has
Right.
become a pretty big one. There's Snapchat.
Right, right. Yeah. So, I mean, but you can see markets are forward looking. They look ahead and they anticipate things. And to the extent that they're right, then those stocks rocket up. While we're talking about general stock market, and let's just sort of cover what's going on. Um, we've seen Apple continue to move up, and with it take the Dow and S&P 500 with it, and to some extent the NASDAQ as well.
Yeah. So a lot of that has been, again, the big market cap companies that really have a major dominating influence over the big indices. Apple is the main one. I think they're now almost valued at $2 trillion. So they are a big, big percentage of all three of those major indices. And you've got Amazon, Google, Microsoft that are all near new highs. But doing even better than those is still the smaller companies. The Russell 2000 is absolutely on fire, and that's a kind of a gauge for small and mid cap companies. But yeah, we're seeing so much demand for solar companies, cloud software companies, and that is, as you were saying, people are pricing in 3 to 5 years ahead of time with these companies, because it's clear now that there's really a path for them to disrupt. And the disruptive companies are always going to trade at higher multiples than the disrupting companies or the disrupted companies, because there's so much more potential for them to grow from here, that it really does warrant that future growth priced in.
Right. And we would tell you that, as you look at companies and you look at it from that point of view, and I have my regular troll on Twitter that comes to troll me every time Apple makes a new high. So I want to fully acknowledge that I have been wrong on Apple stock for many, many years now, because truthfully for me, Ian, you can see my first Apple back there. I was
Yeah.
bought a long time ago.
Nice.
I've always loved Apple services. However, I have seen no real innovation in that company now for over, I'd say, 4 years.
Yeah.
Certainly, there's been nothing really since Steve Jobs has died in 2011, in my judgment. And it has been a company that is largely now, from my perspective, and I know people will disagree, and that's fine, is driven by now almost exclusively by financial engineering.
Right. Yeah. Stock buybacks. They're doing billions, I think. What was the number for, the past 2 years? It's some ridiculous
I mean,
number.
since they started doing this in scale, making this their primary activity every week, I imagine
Yeah.
Tim Cook and company sit down and decide how much money they will spend each week. And people think that this is some small detail. However, if you're spending, I believe it's in excess of $400 billion
Yeah.
since 20, I think it's 2014, maybe 2015.
Yeah.
That's a huge allocation of your capital. It's also they're spending time on, what price should they buy. This is obviously, and of course, like when stock prices are going up, and we see this among our readers, well, that's what becomes your focus every day. I mean, you don't need to
Right.
debate. You can just, hey, buy back stock and bid the price up.
Yeah. I mean, yeah. And, that's something that obviously can't last forever. There won't be any shares left. And they're going to need to, use that cash for something better at some point if they want to keep, the crazy high $2 trillion valuation that company has right now.
Yeah.
So yeah, putting cash to use by buying back shares for a company that's supposed to be, innovating on new technology is not the best idea, in my
Yeah,
opinion.
and then contrast that to Tesla and
Right.
how many chances it's taking in terms of obviously still pushing out. Elon talks about wanting to make the Model 3 even cheaper. He's like, not enough people can afford it. We need to get that price point even lower than it is.
Yeah.
Obviously, the semi, which matters, the Cybertruck, all the other businesses, the solar business, the Powerwall business, the battery business, all of which requires capital to grow.
Yeah, a lot too. A lot of upfront, which is why, it took them so long to make a profit, which you'd see headline after headline about Tesla not making a profit, all these years. And now they're like really profitable and they're going to just get more from here.
Yeah. Overall, I have to say, like when I look at the price movements and knowing that some of the index movement is driven by Apple, no one should be surprised if stocks are move, not in a complete straight line, have ups and downs. And the nature of it is that when these big indices are bid up by 4 or 5 stocks, a big seller coming with a large amount of stock can push an index down. That's going to cause volatility. And so we
Right.
talk about, all of our stocks. Just want to make clear, our time frames are minimum 1 to 3 years, 1 to 3 years.
Right.
So we have a lot of people with very, very short time frames that certainly follow me on Twitter for sure. Probably you as well.
Yeah. Yeah. I mean, yeah, trying to, capture every move in the market is, futile. It really, when you're looking at stocks this volatile, it's really, you got to hold on through the dips because that is, that's just part of the game with high growth, high momentum stocks.
Yeah, and so we just want to be clear. Listen, Tesla's gone up whatever 700%. No one should be surprised if there's a reaction, and it sells heavily.
That's yeah,
This is not a savings account. Stock market is volatile. It moves up and down. Go and look at a chart of any stock, especially in 2020, every single one. So please set your expectations based on actual experience of what the stock, rather than what you want after you buy a stock, which is that there's no guarantee after you buy into any stock that it is only going to rise day after day, week after
yeah,
week, month after month. Stocks do rise and they do fall. And so we would only tell you that, hey, set bet smaller, put
yeah,
smaller amounts in, and that allows you to sit through periods of volatility. In the rules of the game for Profits Unlimited, one of the rules of the game is to set actually a cash reserve in your actual brokerage account, in your investment account. And I tell people, for the vast majority of people, it's 30% because it stabilizes the portfolio so that when you go
right,
through a period like March, you can sit through that because you can look at that cash and you're like, hey, it's your emotional security blanket, your
yeah,
volatility buffer. And then it also makes you think of volatility as an opportunity rather than feeling like you're a victim.
right, absolutely, yeah, definitely a great idea, and yeah, one of the most important rules of the game, in my opinion.
All right, and so let's now switch to the last thing that we usually cover on this, which is cannabis stocks. I got a tweet from one of our very smart, very astute investors, Stacy, who writes me on Twitter regularly, and wanted to know why some of our stocks that are in our services, and we won't give them all away, are going up a little bit slower than much smaller, much less liquid stocks.
Right. Yeah. So this is number one. not a bad sign at all. And number two, the reason that these more or less liquid stocks can do this is because it doesn't take as much money to push them up. So if you've got, $5 million of trading volume on average a day, if a big buyer comes in and puts 2 million in one day, it's going to affect that stock a lot more than one that has maybe 30 or 40 million dollars of trading volume every day. So yeah, the smaller ones right now are really doing very, very well, making all-time highs. And this is, that money is going to flow up into the bigger stocks, into the more liquid stocks. And overall, it's a very, very good sign for the marijuana market. There was one that just reported earnings yesterday, Grow Generation, that was up like 42% in a day. That's one of the least liquid stocks that I've seen. And that's it's at all-time highs now, or at least the highest has been a very long time. There are several more that are at all-time highs that are liquid. So yeah, that money is definitely flowing into cannabis stocks, and it's only a matter of time before it hits those bigger ones.
Yeah, and I will say that generally speaking, the first signs of a bull market is exactly what you're seeing, which is that the illiquid stocks and smaller stocks get bid up first. That's a sign that there's money pushing in. As people see those layer of stocks going up, it naturally makes people seek out additional stocks. And then the bigger stocks take the most amount of money to move. So I would say that this is a really good sign. It's confirmation of what we've been saying and telling you, which is that we think that pot has bottomed out, cannabis has bottomed out.
Right.
And with even any amount of sort of institutional demand coming in, we talked earlier about crypto, the same thing can happen with cannabis too.
Absolutely, yeah. And these are still, really small companies. In the big scheme of things, the marijuana industry is going to do nothing but grow from here. It's going to be, it's going to take a lot of market share from other vice economies like alcohol and tobacco, which are, they peaked out a while ago. They're in the dwindling stages at this point. So there's so much room for these companies to continue disrupting and grow their valuations.
All right, Ian, I think we've done the whole roundup: Tesla, Bitcoin, crypto, stock market, cannabis. So I think with that, we'll bring this edition of Ian Cast to the end. You go first, I will go second.
All right, everybody. Thank you so much for watching. Happy Friday. Stay safe. Have a great weekend.
And a reminder again to check out our funny ad and click on it so we get to our team's goals. And we'll have another Ian Cast for you soon. This is Paul saying bye.